Hello, and welcome. Have you been watching the price of gold lately? It seems like every other week, it's hitting a new high. It leaves many of us asking two simple questions. Why did the price of gold go up so much? And more importantly, will it continue to rise? In the next 5 minutes, we're going to break down the key reasons behind the recent gold rush and explore what the future might hold for this precious metal. Let's get started. So, why did gold become so expensive? It wasn't one single event, but a perfect storm of three major global factors. First, geopolitical instability. Whenever there is major conflict or tension in the world, like the situations in Eastern Europe or the Middle East, investors get nervous. They look for a safe haven asset, a place to put their money that is historically stable and reliable when stock markets and currencies are volatile. For thousands of years, that safe haven has been gold. It's a physical asset that isn't tied to the decisions of any single government, making it a universal store of value during uncertain times. Second, central banks are on a buying spree. This is a huge one. Central banks around the world, especially in emerging economies, have been buying gold at a record pace.
Why?
They are diversifying their national reserves away from the US dollar. By holding more gold, they protect their country's wealth from currency fluctuations and geopolitical pressures. This massive, consistent demand from some of the world's biggest financial institutions has been a primary driver, pushing prices significantly higher. And third, the fight against inflation and interest rate speculation. We've all felt the pinch of inflation when the money in our bank account buys less than it used to. Gold has a reputation as a strong hedge against inflation. As the purchasing power of currencies like the dollar or the euro weakens, the value of gold tends to rise. Furthermore, there is widespread expectation that major central banks, like the U.S. Federal Reserve, may start cutting interest rates in the near future. When interest rates are low, holding money in a savings account doesn't earn you much. This makes gold, which pays no interest, a much more attractive investment in comparison. This anticipation of lower rates has drawn even more investors to gold. That explains the recent past. But what about the million-dollar question? Will gold prices keep going up? Now, it's important to state that no one has a crystal ball, and this is not financial advice. However, we can look at the factors that will likely influence the price. The argument for higher prices is strong. Many of the factors we just discussed are still in play. Geopolitical tensions don't seem to be disappearing overnight. Central bank buying is expected to continue as diversification remains a key strategy for many nations. If a global recession were to happen, the demand for gold as a safe haven asset would likely surge even more. On the other hand, there's also a case for prices to stabilize or even fall if global conflicts see a significant de-escalation and political stability improves. The urgent need for a safe haven could decrease. More importantly, if inflation is brought firmly under control and central banks decide to keep interest rates higher for longer than expected, it could put pressure on the gold price. Higher interest rates make bonds and savings accounts more attractive, potentially pulling money away from gold. So, to recap, gold's recent price surge was fueled by a powerful combination of global instability, massive purchases by central banks, and concerns over inflation and future interest rate cuts. Its future path will depend on that very same tug-of-war. Will uncertainty continue to dominate, pushing gold higher? Or will a return to economic stability and higher interest rates cool down this incredible rally? Only time will tell. But now, you have a much clearer picture of why the world is once again so fascinated with this timeless, shining metal. What are your thoughts on the future of gold? Let us know in the comments below. If you found this explanation helpful, please give this video a like, and subscribe for more insights into the world of finance and economics. Thanks for watching.